In the 12th century, launching a crusade was a monumental logistical and financial undertaking. Moving armies from Europe to the Middle East required continuous flows of capital to secure provisions, armor, and naval transport. The severe bottleneck of the medieval economy was that liquid wealth existed almost exclusively as heavy physical bullion. For a noble taking the cross, this meant liquidating estates and transporting their entire net worth in silver across thousands of miles. This made them a prime target. In a world of physical money, highway robbery was a total economic death sentence. The Knights Templar initially formed to provide physical protection for pilgrims, but they quickly recognized that mitigating the risks of the road required protecting the capital itself. They built a system designed to separate a traveler's purchasing power from their physical wealth. By solving this logistical crisis, the Templars moved the European economy away from its reliance on heavy metal and toward a system of representational paper credit. The process began at a local commandery, like the Temple Church in London. A noble would deposit their silver, jewels, or property deeds into the order's secure vaults. In exchange, the depositor received a paper letter of credit. This allowed them to travel to the Holy Land, appearing destitute and worthless to potential thieves. Upon reaching a destination like Jerusalem, the traveler presented the paper to the local commandery. The Templars would then disperse the equivalent funds from their local vaults in the regional currency. But a paper-based system is vulnerable. If a thief stole that letter of credit, or a counterfeiter forged one, the entire network faced insolvency. To prevent fraud, the Templars integrated cryptographic security. They used a substitution cipher based on the geometry of the Maltese Cross, where specific shapes represented letters of the alphabet. Transaction details, the deposit amount, the date, and the depositor's identity were translated into this geometric code. This made stolen notes useless. A thief attempting to cash one would have to provide the exact encrypted sum. Failure to request the precise amount immediately revealed the fraud to the Templar Garrison. By ensuring only the initiator and the receiver could authenticate the transaction, the Templars built an early analog to modern financial encryption, securing their network against localized theft. Maintaining a standing army and a network of stone fortresses required continuous capital. Donations were the foundation, but the order needed a reliable way to generate yield. However, Catholic canon law strictly prohibited usury, the charging of interest on a loan. To fund massive sovereign loans without committing a sin, the Templars used a legal instrument called the mortuum valium, or dead pledge. The Templars took immediate administrative possession of a borrower's estate. While the loan was outstanding, the order collected all agricultural yields and tenant rents. Because these revenues were classified as the natural fruits of the land rather than interest on the coin, the Templars generated massive passive income while remaining legally compliant with the Church. Eventually, European monarchs outsourced their tax collection and treasuries to the Templars, relying on the order's reputation for mathematical exactness. Their headquarters in London and Paris functioned as an interconnected clearinghouse for international payments. We see this clearing mechanism in action when King Henry III of England had to pay a recurring debt to the Count of La Marche in France. Instead of shipping silver across the Channel, Henry deposited the funds in London. The London Temple sent an encrypted dispatch to Paris, and the Paris Temple dispersed local currency to the Count. The debt was settled through ledger adjustments, removing the need to move physical gold over dangerous maritime routes. This capability to clear international debts purely through data transfer provided an operational model for the central bank clearinghouses that define the modern financial system. The Templars' position as primary lender to sovereign monarchs contained a structural flaw. They were a private institution operating without a lender of last resort. By the early 1300s, King Philip IV of France was drowning in debt. He owed the Templars 8 tons of silver, nearly 17% of his government's total revenue. To escape bankruptcy, Philip bypassed the order's papal protection by weaponizing the legal system, manufacturing charges of heresy to justify their destruction. On Friday, October 13, 1307, the king executed a sudden, coordinated arrest of the Templars across France, seizing their headquarters and their assets. By capturing the Paris Temple and its ledgers, the French crown effectively erased its own massive liabilities. The fall of the Templars was history's first state-engineered corporate liquidation. While the order was destroyed, their system of decentralized encrypted ledgers established a framework for the international banking networks that would follow.